Now let's pivot over to my main focus point, and that is in regards to Russian assets. Russian assets are starting. I'm talking about not from a political standpoint, but from an investment standpoint. And investors are starting to pick up almost any asset linked to Russia. You have names like United Rusal International, which is listed on the Hong Kong exchange. It's been up 50% just in the past month. And with all the sanctions that are going on, it's really hard to gain exposure to these Russian type of assets. You have to do it through these foreign governments that are more friendly to Russia. And it's not just the companies, it's actually currencies as well. Kazakhstan currency is up 4%, which has a lot of ties to Russia. And that's one of the biggest gainers in the world this year is the Kazakhstan currency. And the Russian ruble is up 15% versus the dollar this year. And that's the best performing currency of the year. But it's not that simple. I would say the simplest thing is to get exposure to the Russian ruble. The more complex one, far more complex, is to do with the actual companies because of those sanctions. And it's really unclear how those, even if we come to some sort of resolution, how much of those sanctions will be lifted. And it can be very difficult. Why? Because some of the restrictions are actually codified into the US law. So Trump can't do it unilaterally. He has to run it through Congress to get approved for those removals. And so it may take many years for Russian assets to be investable once again, even though, yes, there's money flowing there. And it's signaling that there will be some sort of resolution to this war in the short to medium term. Now, before the war, foreign investors had $150 billion in Russian stocks and government bonds. And a lot of those were part of the major emerging market indices as well. So there could be a lot unlocked with some sort of resolution, but it's still a gray market in many ways. And then even if they're lifted, how much money will truly flow there? There's always a certain dollar amount, but what about these emerging market ETFs? Think of MSCI. Will they put them back in their index? They have control over that. Will emerging market mutual funds and ETFs, actively managed ones, will the managers decide to walk back into that market with the potential of, another war breaking out in a year or two or three? What type of risk premium will be put on those type of names? So while it's tempting to go down this lane, it's not necessarily a slam dunk, even if there is a resolution to the war. There's still a lot of risk that the sanctions are not lifted entirely, and that those that are kept on limit trading, limit investment, etc. Now, should you avoid it entirely? Not necessarily. If you can get some small exposure, not necessarily the worst idea. If you believe in this administration's ability to come to some sort of peace deal and lift sanctions in the process.